Okay, you guys, we're now going to look at exercise 4-3, page 208. And here we're going to compare a single-step income statement, including earnings per share disclosures, to a multiple-step income statement. Same company, same numbers, and both would include those earnings per share disclosures or calculations. The main difference on the single step, we'll group all revenues and gains together, then all expenses and losses together with the exception of income tax expense. But you'll notice it's just two formats for the same thing, so you'll get the same amount of net income. Earnings per share will be the same both ways. So let's go through it. We'll look at the single step first. Okay, and we'll head it up with the name of the business, General Lighting Corporation. And this is their income statement for the year ended December 31st, 2016. Alright, on the singles, this is a single step form. So on the single step form, we'll start with revenues and gains. First one I see there is sales revenue. And they didn't even include revenue after sales. I probably would there. Well, I guess you have revenues up here. Alright, then we have interest revenue. Then we'll total those. I believe I don't see any gains. Total revenues and gains. It's really just total revenues. Alright, then we'll list expenses and losses. First one there is cost of goods sold. Okay, we'll also list our selling expenses, $300,000. Then we have general and administrative expenses, $150,000. Got our interest expense, loss on sale of investments, and then loss from inventory write-down. Okay, we'll total all those up, get total expenses and losses, and then that difference is income before income taxes. Notice on the single step form we don't have the row income from continuing operations or operating income. That's because to do operating income we would just need revenues and expenses related to the primary activity of the business. That's not the case on the single step form. The advantage here, it emphasizes all revenues and gains and all expenses and losses as your components of income before income taxes. Alright, now to get our income tax expense, we'll multiply income before income taxes, the $467,200, times our tax rate, which is 40%. Alright, I'm going to punch that in my calculator now. You should probably do the same. 467,200 times 0.4. I got 186,880. And that's our income tax expense. Again, that was income before income taxes, the 467,200 times your 40% tax rate given in the last sentence of the problem, just above the instructions or the required items. Alright, now we'll deduct income tax expense from income before income taxes, and that's going to give us net income, $280,320. Alright, now they want us to show earnings per share disclosures as well here on the income statement. To get earnings per share, we'll divide net income, $280,320, by the number of shares of common stock outstanding throughout 2016. That's 300,000. That gets us approximately 93 cents, 93.4 cents. I'm going to say they go with 93 cents here, and they do. Again, that was net income divided by the number of shares outstanding throughout the year 2016. Okay, now you're going to see that the multiple step looks quite a bit different. It's really the preferred format. Let's take a look at it next. Alright, there's no change in the heading. General Lighting Corporation income statement for the year ended December 31, 2016. Then the first section, or on the top part of the income statement, you guys will only include revenues and expenses related to primary activities of the business. This is General Lighting Corporation. I'm going to say they sell lighting fixtures, that type of thing. Alright, so we'll list our sales revenue first, $2,350,000. From that, we'll deduct cost of goods sold, $1,200,300. And that difference we'll call gross profit. That's just the really the markup. How much did we sell the lighting fixtures for above what they cost us? Okay, then we'll list operating expenses. Here we'll have selling expenses and general and administrative expenses. Now the loss from the write-down of inventory due to obsolescence, you guys, selling inventory is why we're in business. That is a part of the normal operations of the business. Hopefully that we don't have inventory becoming obsolete every year, although we might. But that would be considered an operating expense. You know, it's a loss there. It is part of operations. Okay, and then we'll total those. Total operating expenses, $650,000. We'll subtract that from gross profit, and that gets us operating income of $499,700. Notice that's a number we did not have back up here on the single step form. So the multiple step form just gives you more detail, as the name suggests. Okay, then we'll list other income and other expense. Interest revenue would be included here, as would our loss on sale of investments. Selling investments is not a part of normal operations, but a write-down on obsolete inventory would be. I hope that makes sense. They're in the business of selling inventory, not in the business of selling investments. Our interest expense would be included here as well. And then we're going to net those items together. Of course, interest expense and the loss would be deductions. Interest revenue would be an increasing item. So we get total other income and expense at the net amount. Well, that just means we've netted them together. A negative $32,500. We're going to subtract that from the $499,700, and that gives us income before income taxes, $467,200, which is the same thing we had up here, right? Income before income taxes, $467,200. Okay, now we'll just multiply by the 40% again. I know we've done that already, but it can't hurt. 467,200 times 0.4, 186,880 is our income tax expense, which we'll deduct from income before income taxes, and that gives us net income of $280,320. They want earnings per share shown here as well. So again, we'll say $280,320, our net income, divided by the number of shares of common stock outstanding throughout 2016. It's 300,000. And again, we get the 93 cents earnings per share. Okay, you guys, I think after working this one along with me on some paper, you should be ready for your next homework exercise, 4-3 on the Connect site. Thanks a lot.